Lighting. Yes, Tandekile, how are you?
Good. How are you?
I'm fantastic, thank you, guys. This is
Good.
Tandekile Moloko. She is
Hi,
from
guys.
she's from Sim Wealth. And Sim Wealth basically is a boutique and an independent financial planning house.
Mhm.
And basically what they do is they plan your finances holistically, right, Tandekile?
Yeah. Yeah. Yeah.
Perfect. So, Tandikila, I've got a couple of things that are on my agenda today. Thank you very much for
Sure.
making some time. By the way, for those who do not know, Tandikila is going to be our resident financial planner at the Financial Bunny Gym. So, we're quite excited to have her there. But so we're really excited about that. And as I was saying, Tandikila, one of the things that I've got on the agenda today, one of them has just squeezed itself in. It is this new announcement that was made by Liberty to suspend income protection that has retrenchment as a benefit. So they're suspending sales of it. So, of course, you know how I feel. I'd like to get into that conversation. And then we'll talk
Yeah.
a little bit. I don't know if people have seen my asset allocation that I've done. I want to talk a little bit about, do you stick to the plan that you and your financial planner have created? What if you have not created a plan? What should you be looking at in terms of, financially planning during a recession? But somebody said something very interesting, Tandegile. He said the insurance companies sell you an umbrella when the sun is out. When it starts raining, they take the umbrella away. Can you talk us through what is the reasoning behind Liberty suspending this important product?
Okay. I mean, look, firstly, not to the defense of the insurance houses, but it's not this. So using the same analogy that you just had about the umbrellas, you
Yeah.
can't want an umbrella when it exactly starts raining. You should buy an umbrella beforehand. That's exactly how you should be looking at it. So if you are in the case of what Liberty is doing right now with the suspension of the income protectors, if you are only looking to get an income protector now, it's a little bit too late because the risk rating of what's happening with the unemployment that is going to happen right now is going to be insurmountable. It's going to be too much of a risk for them to take on, right? So obviously that's why they're suspending it. But for all the people that already have it, right, they cannot say now that you are not going to be able to claim. Do you understand what I mean? Because of the policy documents that you had signed at that point in time, there was no exclusion of retrenchment. There was no exclusion of retrenchment because of a COVID-19 virus coming about. So if you signed the policy beforehand, they are obligated to pay out any claims at that point in time. So it's really not a problem. But if you're looking to take on an income protector right now, it's a little bit too late. It's a little bit too late.
But Tandikile, is that fair though? Because let's talk about this. People generally
Sure.
take out products, one, because they know of the product, right? And they know what the benefit is. And two, because they can foresee a risk. And surely if those two factors are in place, one, there is currently a risk of retrenchment due to the COVID-19. It was unplanned. Nobody saw it coming. So am I now not allowed to cover myself? But also, two, there is now been greater education and awareness around, policies and products that are available to cover someone when there is a risk like this. Why then are you it's like if I'm in the rain and all of a sudden I feel and I find out that there's an umbrella. Why can't I go and buy an umbrella?
Yes, but hence I'm saying that with the analogy that you're using about the umbrella, right? So the umbrella becomes a scarce commodity. So find yourself in a situation where um look, umbrellas are far-fetched, so everyone has their own umbrellas. You don't have an umbrella, right? Which is the same concept as the income protector. Now this becomes a scarce commodity at that point in time, and what happens is that because of that, now you can't find an umbrella, and now people are selling umbrellas at a far too high rate, or actually it's not beneficial for them to sell it at all. So that's what's happening with the people that, well, the risk management houses or the insurance houses in that regard. I'm not disputing that the need for income protectors is, it's quite high, but also we need to take into consideration that no one is going to put their money in jeopardy knowing that you're going to claim from it. Do you understand what I mean? The probabilities and the percentages are going to go extremely up right now. And that's the reason why they're just continuing it. And please don't get me wrong. It doesn't mean that at this point in time, there's no other contingency plan that can be put in place to safeguard yourself in these instances. But look, you know, from a business perspective, as well as you know that you're also a business owner, there's certain things that they need to take into consideration that just won't be beneficial.
No, and I fully understand. I mean, as you rightfully say, I'm a business owner and understand, you know, putting business interests also at the forefront. But the reality is that we are sitting with a business model that is built on the backs of people. Insurance is supposed to be for the interest of people. Insurance is supposed to be something that somebody can tap into because of an unforeseen loss. Now, for me, it's the timing. Now, and we had a conversation about retrenchment a couple of months ago, remember? And you had said already some of the financial institutions were already pulling retrenchment covers away. For me, it's the timing that Liberty is making this business call, because Momentum did it. It did it a couple of months ago, but over in a they've made a couple of new changes. And in their new changes, they've made the criteria a little bit more stricter to be able to access their retrenchment. Now, for Liberty to halt altogether, that for me is it just feels a bit no, guys.
It definitely does have a bitter taste to it, right? And like, please, I'm not disputing it, especially about the timing, because obviously they've got they can do their analysis in terms of what is going to happen in the current markets and in general what's happening with South Africa right now. Retrenchment was going to go higher and higher as time goes by. And that's why a lot of the other financial institutions took the route of actually either terminating income protectors that had retrenchment cover, that specific element to it, or actually having those stricter measures in place. So I think perhaps maybe it's just something that they didn't think through to the core, I think, on Liberty's perspective, but it was something that was going to come about, because I definitely understand that from a South African perspective it will make sense because of the job losses that are going to take place right now.
Because in all essence, and this is something that I read from Sneemans and Inc. in terms of, so they were having a conversation or a blog post around what happens if you have signed an offer to purchase right now. And they're saying, according to South African common law, a force majeure of suspending the contract then comes into play because COVID-19 is an act of God, right? It's not something that somebody could have foreseen. So what are, and you've rightfully said, it's not all doom and gloom. There are other contingencies that can be made. So if you are, and because the other thing is, and these are some of the comments that I've received on Twitter, is that people are saying, I was paying for an income protector. I didn't even know it didn't have a retrenchment benefit. So now I've called to ask for a retrenchment benefit to be added, and they're saying no. So, and that's the other thing now. So what are the contingencies that people can put in place right now who are foreseeing some sort of retrenchment or layoffs?
You know, because I think, you know, what's happening at this perspective is the whole concept of us being reactive. You know, and when you're being reactive, it's very hard to now put solutions in place when we are now in the challenge and the situation in place, especially when we're speaking about finances, because what happens is that if there's retrenchment or loss of income, you generally don't have other methodologies that are going to assist you, right, in this time of need. So now it becomes very hard for you to plan in this time of need. And this is when you now need to start thinking out of the box, out of even financial planning, as to how am I going to fix the situation that I am in? How am I going to get myself out of the situation? Do I actually start thinking of, it's not even going to be a side hustle anymore, but it's going to be my main hustle, something that is going to assist me so I can sustain myself going forward? Because I'm not longer employed, or it's hard for me to get a job at this point in time, but I still need to sustain my living expenses. It's important to have those conversations now. But when we are now speaking of people that have income protectors and there were no retrenchment covers, I mean, these are the conversations that I duly have, especially with my clients and anyone that actually signs any documents. Guys, read through them. Read through them. Like, it's so important, because in those documents, in that policy document that you signed, it specifically said that there is no retrenchment cover. It says everything that you are covered for, and it states that you do not have retrenchment cover. And even though you're thinking income protection, and perhaps maybe the name in itself is what's derailing us or making us think or implying that there is a retrenchment cover, in actual fact, most of them don't have.
Yeah, because,
so
because and I think you're right in the name, because if you saying to me you're selling me an income protection or income cover, it immediately, I think, whatever reason of me losing my ability to derive an income, especially something that is out of my control, should then be covered. I mean, if you're going to restrict income covers to just disability or death, then what's the point of a life insurance? Then I should have a life insurance, because why are we stacking certain products to only pay out where there's already a product that pays out for that?
Look, you know what, Nicolette, I think that in some instances, income protectors do play a role, right? But it's solely dependent on the individual and their certain financial circumstance and what they need in terms of their financial plan. You know, and I'm going to get into a lot of hot water for the comments that I'm going to make, and is that a lot of financial advisors and the decisions that they make, unfortunately, it's not even their fault, because of what they have been told by management and how to actually go about financial advisory, you know, which is a lot of product pushing. And I think that's why a lot of people are not fans of the financial services industry, because they think that, look, I'm going to be sold the products. They really don't care what I need. They really don't care how this is going to benefit me, you know. So it makes it very hard for us to actually say that, no, there is financial planning. There is different routes that we can actually take. And this is how it's going to be beneficial for you going forward. People that were sold income protectors and they didn't know what's in it, that is just pure bad advisory. I can't speak for it. I can't say anything beneficial to it. It's just your bad advisory, and this is where RDR needs to come into place. As much as they've spoken about it, and there've been a lot of review notes about how they're going to action RDR, but if people are being paid for fees and not necessarily for the advice that they're giving, people are going to be sold products that they do not need. It's going to happen. It's inevitable.
I mean, it's interesting that you and I, at some instance, I started a conversation and you found yourself in an argument with someone about whether you're a financial advisor or a planner.
Sure.
And I think you are leading us right into that conversation, because what we are finding is that people are it's being sold products in isolation. And there's no overall planning. So you are going to somebody who's selling you a funeral cover. Then you are going to another person who's selling you this product. And then you're going to another person. And when you sit back and you look at all the products that you have, they don't speak to each other. They don't support each other. They're not plugging where the holes are. So you remain having the holes, but you've got millions of financial products that are costing you so much money every single month.
That's absolutely true. And I think from the various conversations that I had with clients is that, you know, I get so, I don't want to say annoyed, but sometimes, you know, it's just an educational thing with clients when they ask me, okay, so what are you selling? What's your product? And I'm like, no. Okay, let's go backwards. I'm not selling you a product. I am doing financial planning. I am walking you through your goals. I'm walking you through your financial circumstances. I'm walking you through what you need for you to achieve your goals and aspirations. And I'm telling you about all the financial services and investments, estate planning, tax planning, all the things that you need to put in place so that you're able to achieve it. Now, if we're just looking at products, it's not going to work. So with a lot of clients that come my way, I kid you not, they've got things that they don't even know, firstly, which financial institution it's with. They don't know how it works. They have possibly four of the same thing. And I ask myself, why is that the case? And it doesn't matter whether you uhola 5,000 or uhola 200,000. It actually doesn't matter. There is so many people that are going through the same thing, and they don't know the dire consequences of going through that process.
And I think that for me is really where the big problem is. And somebody rightfully says, you know, sell the product and write the terms and condition in layman's terms. The other thing is that, and often I find this, and I speak to financial planners a lot from Sanlam, and I always say to them, when you're talking to your clients, stop talking like you're talking to your colleagues. They don't understand. You know, we're not here marking you on you sounding smart, because we don't know what smart actually sounds like. What I need you to do for me.
That's just the finance industry thing. We like jargon.
But at what point do you guys realize that the jargon is a barrier?
Yeah, no. It's true. It's true. I think it's something that you definitely need to unlearn. In terms of the jargon that you use. I think you become so well acquainted with the terminologies that you use and how you use it that sometimes you don't know how to portray your message in a layman term way, in a way that is understandable, and in a way that is going to reach the person, and so that they understand the effects and the impact that it's going to have in their lives and the challenges that it may have in their lives as well. So I mean, it comes with time, and I'm not quite sure, because look, I'll be very honest, I didn't work for the insurance institutions, but I think perhaps maybe in their training and how they go about their training, they need to incorporate the EQ level of how to speak to clients, you know, and how different clients need different methodologies to actually understand the fundamentals of financial advisory and how it will work for them.
Yeah, and maybe just to move away from the conversation of income protector, there's a question that's coming in from Nomzamo Mlausi. That's quite interesting. She's asking what happens in an instance where an employer institutes a no work, no pay policy, or makes employees take unpaid leave, because that due to COVID-19. So the reason of why they're doing this is an act of God, and it's something that an employee couldn't have planned for, but it's not necessarily retrenchment and doesn't fall under when an income protector would pay out. What does a person then do in that instance?
Most income protectors, and I'm going to speak to you very frankly about the income protectors generally pay if there is a certain type of impairment or sickness that you are experiencing, and not necessarily if, look, there's a loss of income because your employer is unable to pay you or whatever the case might be. In most instances, if you cannot work because you are sick, or there's a functional impairment with you because you had a car accident and it's going to take you 2 weeks or whatever the case might be for you to get better, or whatever the case might be, then that's when it's going to kick in, and that's when it's going to assist you. So yeah, look, you can go through the fine print of the policy document that you have of the income protector, because obviously I do not know every single one of the financial institutions and how they work, but generally the general synergy of them is that they help with the functional impairment, or you not being able to work because you are sick or you are disabled temporarily, so and that has a hindrance on you getting an income of some sort.
So basically what you're telling me is that in your knowledge, there really isn't any policy right now that a person would be able to take that would pay for a situation of no work, no pay that is imposed by an employer.
There was. Right now.
What was it?
I doubt. There was. So a lot of income protectors, this is what happened, right?
Okay.
A lot of income protectors had a retrenchment cover and a no work, no pay type of aspect to the income protector cover, right? And what generally happened, it was that the income protector was, as I stated, so if you had an accident or whatever the case might be, or you're sick or whatever, then the income protector is there. Then there would be an add-on that you would get onto the income protector. And then on the add-on, then you would include the retrenchment aspect. And obviously that would have a higher premium onto it. Yes. So there was that. Right, but after what happened, or what is happening with the country in terms of the economy, GDP, a lot of retrenchment happening, they started pulling those benefits away and saying that, look, we no longer offer it, or it's no longer beneficial. And like such as Liberty right now, they halted the sales in that regard. But at this point in time, in terms of a policy, no, to my knowledge,
yes,
there isn't.
Of course, and that's quite scary for an economy like an emerging market economy in South Africa, because then it means that the services sector in South Africa is not necessarily working to the interest of its public. Because if you cannot put in a policy or a cover that will actually cover the one risk that is probably huge in the country that can cripple most households, then you're not working to the benefit of your people.
I think, to be honest, Nicolette, I think in terms of emerging markets, right? Especially emerging markets that have the volatility that we have.
Yeah.
On a business perspective, it wouldn't necessarily make sense. And please, I'm saying this because a lot of actuarials, we have discussions with a lot of actuarials. And these people, trust you me, we have a lot of arguments with actuarials, because we're like, do you guys have to be so stringent in your methodologies and your processes? But when they look at the business model and how they are going to recoup their money, because at the end of the day, they're not a NGO, they're profit, or their business, they're profit generating business. So when they look at the business model, they see that if we are an emerging market and the volatility is so extent that people may lose their jobs, right? It may not be beneficial for us to actually have that in place, right? It's not beneficial for us as a business. So look, saying that, okay, that is the case does not necessarily mean that as a person, you can't put things in place for yourself that are going to be beneficial. I think in terms of financial planning and a lot of thoughts that I've had with myself is that I think somehow we need to stop moving away from insurance to be the dependence of our growth, of our mitigation of risk. There's other ways of protecting what we have and protecting our capability of generating an income. There's other methodologies that we can put in place that can be beneficial. Ooh, sorry.
And those are the methodologies that I'd like us to look at, Thandekile. I know we're deviating from our planned conversation a little bit.
Sure.
But I think it's really an important thing right now, because at the end of the day, we are, I mean, if there's going to be an extension of this lockdown, we are imminently looking at a lot of job losses, SMMEs folding up, people being retrenched, job cuts, people being asked to take payment cuts. So there's quite a lot that is going to happen, and I want our conversation to still be relevant. So what are those things, and from a financial planning perspective? I mean, yes, the emergency fund is there, but at the end of the day, people are quite discouraged to save on their own because they actually don't know where to put the money, where it's accessible, beats inflation, and still actually makes a great return. If you look at any other asset classes, again, you're losing. The stock market have plummeted. Property is doing badly. The only thing that's kind of doing really well right now is bonds, the bond market. But at the end of the day, we can't have the whole country trying to withdraw from the bond market at the same time, So what are those contingencies?
So contingencies right now is, the word emergency fund, I think we've thrown it around so much that it's been something that we generally don't like anymore.
Yeah.
But it is something so beneficial, Nicolette, I kid you not. It saves a lot of situations, if I can call it that, because I can tell you all the nitty-gritties. I can give you technical terms of you can go into cash instruments with bonds and fixed incomes and whatever the case might be. But purely what a client needs to know, or what a person needs to know, is that they need to have money set aside that is flexible enough for them to actually recoup in times of need.
Yes,
right?
yes.
And that's not necessarily going into the equity market, because such as you said right now, the equity market had a plunge right now, and what you recoup right now may not necessarily be what you had put in, which means that you've made a loss, right? But that being said, you know, you need something extremely conservative where this money is just put away for your emergencies. And emergencies from person to person can be so vast, to a person that just needs a little buffer in terms of the income that they need, to a person that lost their job and needs a 3 months process so that they can find their feet and find a new job or start a new business or whatever the case might be. But they need something that is going to assist them going forward. So that's why the experts before us, in terms of expertise, when they said 3 to 6 months, this is a case in point that shows that we actually might need that 3 to 6 months emergency fund to make sure that it assists us. Because this is when our employers are telling us that, look, we can't pay you no more. This is the time when our employers are saying we need to give you a pay cut or whatever the case might be. Or actually they're giving us a delay in terms of when they're giving us our salaries, but the debit orders are coming in, even though these banks are telling us they're giving us all these benefits and these leaves that, But you know, you need something that is going to allow you to be a going concern, you know, as a person and as a family. So
sorry, carry on.
So I was saying that, but with the emergency fund, I mean, I definitely feel like you need something that is flexible. So you need to put your money into something that is flexible, something that could be attained and readily accessible at any point in time, but still gives you a return that is above inflation.
And that's the thing. That's the thing that always frustrates me, because the first point of contact then is a bank account, right? That most people have access to. And when I talk about access, I'm not talking necessarily about, you know, access in terms of that's what you can use, but access in terms of information also, right? Because that's what you are. That's what gets, it's almost, for me right now, the emergency fund in a bank account is similar to the way a funeral policy has been pushed and marketed in this country. Is that the what you had alluded to earlier on, to say you can tell me about cash instruments and all sorts of things. No, we don't know those things, you know. So if I don't know what is the alternative to a bank account, then I'm stuck with the bank account. And often, if I look at my return at the bank account, I'm discouraged then to put my money there. And 6 months worth of my salary, I mean, if you're earning 10,000 Rand, that's 60,000 Rand that's sitting in an account where it's making plus minus 60 Rand every single year or month, you know. You're getting a very minimal return on it. So how do we make sure that people have access to those other alternatives that are not the bank?
I would definitely say, you know what, I'll be honest, and I'll say that this is the house view that we have at Simwealth, is that our whole concept is horses for courses. And when we speak about horses for courses, we mean that savings and investments need to be with asset management houses. And that's purely how it should be. It should be with asset management houses, and then your insurance, your wealth protection, so your income protectors, your life covers, whatever the case might be, will be with the insurance houses, because that's what they're good at. The people that deal with asset management, right, that's where you're going to get your cash instruments, right, which is like your money markets, basically your cash instruments, but you're getting the fair value of what you should be getting. So hypothetically, if they are saying that you should be getting 8%, right, they are going to say you're getting 8%. Obviously, it's net of fees in terms of their administration fees. But if you look at the fund fact sheet of a money market with the asset management house, what they say there is exactly what you're going to get. I don't want to get complicated, but that's why
there's complicated. I'll break it down now.
Okay, so that's why there has been a whole conversation that has happened with the CISA right now,
Yes.
or rather, it was 2 or 3 years ago, where they implemented the whole EAC, which was the effective annual cost, because they
Mhm.
saw that no man, there's so many discrepancies in terms of what's happening with the insurance houses, the banks, the asset management, where all these fees don't make sense, right? So there's certain
Everybody was just
houses
having
which
fees
are
in J.
Yes, just fees. There were certain houses like banks that are charging, or rather, they would say that you would get an interest rate of 13%, right? But in actual fact, it's a lie. If you actually see net of fees, if you see actually net of fees, you're not even getting that 13%. So in actual fact, the money that you're getting that is coming into your pocket is not what you're actually anticipating, because what they told you is that you are getting 13% or whatever the case might be. So it's important to actually get courses for people that actually give you a clean breakdown of what your fees are going to be and what you're invested in, what are the consequences of what you're invested in, and how much you should be anticipating. Obviously, if you're going into the equity market, you can't anticipate anything, because obviously there's going to be volatility in that regard. But they still have their mandate that this is the benchmarks that we've set out for ourselves. This is what we want to attain, so that even within your financial plan and within your knowledge, you know that this is what we are working towards, and I can incorporate it within my financial plan.
So essentially what you're saying, Thandekile, if I'm understanding you correctly and trying to make it as layman as possible, what you are
Sure,
essentially saying
sure.
is if you need to go to the financial institution that is created for that specific product. So if you are going to, for instance, let's use the credit insurance, which has been a big woo-ha right now, right? Banks
Yeah,
now
yeah,
have credit insurance, but that is not the mandate of banks. Banks are not
yeah,
supposed to be insurance houses. So
yeah.
essentially what you're saying is their credit insurance is probably going to be a weaker credit insurance versus somebody that went into the business of doing credit insurance. It's like somebody making Amafet Cook, or let's say a
Yeah.
KFC all of a sudden selling beef burgers. You said you are a chicken
Exactly
company.
that.
Why are you making beef burgers now? That's
Exactly
what
that.
you are saying. Horses
Exactly that.
for what? Horses for
Exactly.
courses.
Yes, horses for courses.
Okay, that
Horses
makes
for
sense.
courses.
So you're saying
So,
if you want to get the amount that you're being told you're going to get without all the discrepancies of now they're going to minus for fees, they're going to minus for an expert advisor
penalty.
because they have to hire one because that's not their job. You rather go straight to the source and cut out all the middlemen that need to be paid from your premium, basically.
My colleagues are going to hate me for this. FYI, Colette, what are you doing?
No, but then we need to tell people the truth because it's and you are actually uncovering something that is quite interesting because I'm just thinking
Yes,
about it and I'm thinking from a normal person. If I am a
yes,
business, if I am financial fitness bunnies and I say to people, I'm a feti. I now need to
yes,
get somebody who makes amafeti. But for me to be
yes,
able to make a profit, I need to pay the price of the person who's making the fat cooks, and then I have to put
yes,
a markup on it. So I'm adding an
yes,
additional layer of fees that
yes,
should not be there.
yes, yes, yes,
My
yes,
goodness, I
yes,
feel I
yes.
feel like the blinkers have just come off my eyes.